This episode of Broker to Broker is brought to you by CoreLogic. You've probably heard that 5 to 8% of households are shopping for a home at any given time. But did you know that CoreLogic Solutions allows you to see which of your contacts are looking at homes for sale or thinking about refinancing before your competition has a chance to scoop them up? AIME's chairman and CEO, Jonathan Haddad, said there's nothing else like it in the market. Leading brokers like Tom Ollie's of Edge Home Financing are seeing results. He uploaded his contact list, identified 17 shoppers in minutes, and closed 6 new loans. Michelle Creation from Empire Mortgage has borrowers in her pipeline now that she wouldn't have landed without CoreLogic. In just weeks, CoreLogic Solutions have transformed how her company operates. Be the first to reach out so you can retain your customers and grow your business. And as an AIME member, you have access to discounted pricing that's not available anywhere else. For more information, visit corelogic.com/AIME. Click the link in the description to learn more.
Welcome back, everyone, to another episode of the Broker to Broker podcast. This podcast episode is brought to you by CoreLogic, but I'm your host, Mark Summers, founding director of AIME. Today, very, very excited for this guest, as I'm excited about all of the guests. But this one is a funny one because we were just talking before, and I'm like, you've been on this podcast before. And he's like, no, he's just such a big part of this community. I automatically assumed we did. But our guest, he's been content all over the past few years. He knocks it out of the park with us every single time. He's been a webinar host, a live stream presenter, a Fuse panelist, which we're going to talk about. And this is the man, the myth, the legend, senior mortgage broker with High Five Team, Rylan Maddox. Rylan, thanks for joining us today.
Mark, thank you for having me. So glad to be here.
Yeah, no, we're going to have a little fun with this, although you do all the heavy lifting, because it's all about you, my man. So tell us, because I know you have a unique story, and we'll talk about, how you expressed this story at Fuse. But tell us how you got here, because you've been in mortgages for quite a bit of time here. So tell us your journey.
Yeah, it's, I find myself kind of thinking like time has flown, and then I start looking back, and it's been over 12 years now that I've been in this industry. And that is so interesting to me because how I got started in this industry, if you look at my resume, and for those of you listening, it's pretty much on the NMLS. You can go see my past employment history. It's kind of comical because I didn't keep a job for more than a year. Ever since high school, college, like I was 9 months to 12 months and I'd get bored and I'd need to shake things up and I'd do something different. And so when I got into the industry, I was actually a sales rep for Budweiser. I had been there about 6 to 9 months, and I ended up getting a route for downtown Honolulu, and I moved in with a guy who had just gotten out of the Navy and joined a large retail company that specializes in veteran loans. And Budweiser didn't pay anything crazy. And my roommate was the type that would come home and go, look how much I make, look how much I make. So it only took a few months of that for me to go, all right, what do I got to do? What are you doing? And he told me about this thing called mortgage lending. Never in my life had I thought I'd be in banking or
right,
mortgage lending, et cetera. So took my NMLS test. This was back in the day when we still had separate tests. So you had to take federal and state separately. And I took state first, passed it. I took federal first, passed it, and thought, oh, that's the hard test. I'll just kind of wing the state test next week and be fine. Quit my job, put in my notice, and pretty much walked out. Took the state test the next week and failed. And so
really,
I was unemployed. Hawaii state test got me, those lava zones and stuff. But I was unemployed. That little drop of sweat started forming. Like, what am I going to do? And luckily, 30 days later, took the test and passed and got hired by the company. And that was October, November 2012. So IRRRLs were pretty popular then. And so as soon as I jumped in the industry, I got a desk. I got an escrow officer's name and contact info, got 900 names, addresses, and whatnot on an escrow list, and just started dialing. Out of those 900, I closed 6 loans. So lots of no's, lots of cussing. I was in Hawaii, so lots of people had moved back to the East Coast, and I was calling them at midnight their time accidentally, new sales guy. And
It happens.
and yeah, but 900 calls to close 6 deals, and I made more money in those couple months than I had made for the past couple of years. And it was great. And all at the same time, the fear set in of I had never been commissioned before. So the money was awesome, but then it was like, where does my next paycheck come from? And I freaked out, and I walked into my boss's office and I said, I quit. Like I need to put in my notice. I need to go back and work a salary job. Like I'm freaking out here because I'm a numbers guy. I'm a process guy. I loved originating on the computer, but you tell me to go golf or have coffee with agents, and my anxiety levels went off the charts. So ironically, my roommate's the exact opposite. And my branch manager at the time was like, do you and your roommate never talk? Like, what are you doing? Your roommate hates being in the office. He loves talking to people and schmoozing and could sell ice to Eskimos. He's like, you hate that and love being in the office. Like, you guys need to sit down. And so that was the beginning of, he would go out, overpromise, and I would deliver. He was an amazing salesman and an amazing, he knew how to work the room. He understood people. And we crushed it. 2013, 2014, we put up 6-digit volume and just had a great time doing it. And that quickly kind of grew into an expansion. And the first state we expanded to was San Diego. So the loan officer that I was assisting at the time became partners in the branch. So it was himself and the other branch manager as kind of partners. So it was easy for them to expand to San Diego. One of them stayed in Hawaii. The other one went to San Diego, took over the branch there. Well, in 2015, they expanded to the hometown of one of those branch managers in San Antonio. So now we have 3 branches we're in charge of. And mind you, I'm only 2-3 years in the industry at this point, but we were kind of hard charging, and they put me in charge of the Hawaii branch, which was interesting. But the more interesting part is I became the face of the Hawaii branch. And as I just said, I'm actually an introvert. A lot of people don't know that if you've never spent personal time with me, because I had to learn to fake the outward going, the social interaction, right? So I became branch manager in 2015, and we were cruising, we were crushing. I think at one point we were, for purchase business, VA purchase business, which is what we focused on, our branch was 24% market share in the state of Hawaii. So
wow, that's big. That's big.
Yeah. It was like, especially looking back now and seeing, market share now so spread out. Looking back then, it was crazy. We had 13 loan officers. Hawaii is a smaller market than a lot of markets, so we cheat on the volume, right? Much like some of the other high price states, but our unit count isn't anything that impressive. We used to always compete with the Tennessee branch, actually, because they would double our unit numbers and we'd be kind of similar on the volume side. But 2015 took over branch manager and started having to take on those roles of going out and meeting with real estate brokerages as a company, kind of company to company relationship. But I really enjoyed it because I still was originating, but it was a lot easier for me to set up those relationships for my loan officers with those different teams. So if there was a realtor group that I just didn't mesh with on a personal level, I could introduce my loan officers into that office, find personality matches that fit, and just kind of support people growing their business. It was a lot of fun. I enjoy that kind of production manager part of the business, just helping other people grow their business. So I think that's why it's been so easy for me to transition into the wholesale space. I don't want to skip ahead, but we say that retail is competition and wholesale is collaboration. This community is just so giving and so open with everything. And I was naturally doing that, but within my company. And so being able to just do that to an entire community just feels good. Yeah. But that's kind of how I got my start, not to get too far ahead of ourselves.
No, you're good. But then so how many retail branches have you been a part of? I mean, like, I bet you people listening to this podcast for the first time are like, are we promoting retail now?
Yeah, so I was retail for the first 10 years of my career. I've only been wholesale going on 3 years now. And I was at 3 different retail branches. So the first one I joined in 2017, I actually joined real estate for 6 months. A lot of people don't know that. But in 2015, 16, and then finally in 17, when I took on that branch manager role, I started seeing behind the curtains. I started seeing the goodbye. We use something called DocuTreeve, I think. It was like our online document storage for everything. And when I got that branch manager position, my credentials opened up. And I'm just a curious type. We had Tableau at some time. I think now Polygon and some of these other data sources are really awesome. But back then it was Tableau. It was just a massive dump of data. And I used to crawl through there and search by zip code, average loan amount, average cost. I was running, the typical percentage conversion for pre-approvals to contract, fallout, so on and so forth. I loved that data. But through playing with all that, I started seeing the goodbye letters or the service transferring letters and started seeing the margins that were actually on the backs of some of these loans. And getting into those weeds while at the same time hearing realtors, constantly say, oh, so-and-so has better rates than you. So-and-so, XYZ has better rates. You guys are so expensive. Putting those two together, in retail, you hear all the time, sell service, not rate. And it started becoming very apparent that my service isn't going to change. Though my process, the way I talk with clients, the follow-ups I do, post-closing and so on and so forth, that's not going to change based on the company I'm with. But the rates that I'm able to offer absolutely do. And so 2015, 2016, and then especially in 2017, I think the worst part about it would be I would close a loan, and that same week, because again, Hawaii's a very small community, my client would have a buddy who just bought a house somewhere else with someone else. And he'd come to me and go, Rylan, I know my buddy and I both have good credit, and we both bought a house with a VA loan about the same price, and he had 0.5 point lower interest rate than I do. Like, what's the deal? And you can only kind of sit so long saying, oh, well, who knows? Maybe he locked on a different day, or maybe this, or maybe they did something different. Like, there's only so many excuses you can give a client that people just know, like, well, you're not the best deal. And at the end of the day, we're not selling Fords versus Ferraris. It's a 30-year VA fixed note, whether you go through my big branded company or an independent broker. And so, yeah, after a couple of years of fighting the reputation of having high rates with clients and realtors, and then seeing it on the back end that the only reason we had those high rates is because pockets were being padded with the margins that I saw. It just got to a point where I burned out, and I walked out of the industry in 2017. Looking back, it was one of the things I do regret, because I took my entire book of business, the best years of my career, and I handed it off to a protege for free. I said, here's my clients, here's my realtors. In fact, I helped him get new relationships with all of my best realtor partners. Hey, this is my guy. He's going to take care of you. And I gave him the business. And fast forward, he's actually back on my team now in wholesale. Good friend of mine. And he was a rock star. That was the worst part, because after my 6 months in real estate and realized I don't like real estate, I like lending, I like problem solving for my clients. When I came back into the industry, he did an amazing job. And so it was really hard to go back to my clients and my realtors and say, hey, I know that my buddy's been taking really good care of you, but I need you to send me business again.
Right.
So we have a great relationship. But yeah, if you're listening and you're burnt out, don't ever give away your book of business. Leave some sort of way to come back if you ever change your mind. But yeah, so 2017, I took a break for 6 months and started getting that itch to get back into mortgage. I had been approached by a company before I walked away from the previous retail branch. So I hit them up and they courted me for a couple months. Again, retail, lots of margins, so fancy dinners. And at one point they even brought me a spear gun to one of the dinners that they set up for something. So felt really good. But again, it was all money and flash, and that has to come from somewhere. And ultimately that's coming from the interest rates and the margins that clients are paying for, right?
Right.
But I opened up a shop for them. They were in talks. They had taken over a couple offices of a competitor on the mainland, and they wanted to acquire a large group in Hawaii. They weren't physically in Hawaii, but the competitor was. And the plan was that they were going to acquire those branches, 3 branches, 150 loan officers. And I was going to be the area manager just due to the size of the merger. Sounded great. I got to produce a little bit. I was going to get some nice overlays from 150 producing loan officers. Sounded like a sweet gig. So we signed a 3-year lease on a building. I went through all of everything that goes into starting a company up in Hawaii, which is a brick and mortar state and all that jazz. And long story short, 11 months later, we weren't acquiring the company. The president of the company actually left to go to another company. The executive, the leadership kind of splintered and the whole deal fell apart. So here I am with a 3-year lease. I'm by myself. As I said, I'm an introvert. I'm not really a recruiter by heart. And so I'm just doing loans, but with tons of overhead, and wasn't having a good time. So I transitioned away from that. I had another friend in retail, and I said, look, I just want to come back and do loans. I don't want to be a manager. I don't want to run a business. I just want to do loans. Like, can we just do loans? So the last one, and I left on a good term with them. So they're a great wholesale partner, but I worked for Homebridge as my last retail position, and Homebridge Ribbon in Hawaii. And we had a good 2-3 years. It was great people, great culture. The pricing was sharp as retail could be. And even then, everything was good, but it wasn't great. I'm a very analytical person. And so the people were great. The people were good. The rates were good, but I was still asking for concessions constantly. This was during COVID. And you guys know, rates were awesome, but there was always a lower rate, right? Margin compression really hit during COVID.
Yep.
And yeah, so after a couple of years, I mean, we had great volume, we had great years, but I had more and more friends joining wholesale during that time, and more people in my ear telling me, like, you got to come check this out. And I'll give a shout out to the Arrive team, but one of the really big wake up calls in my head was I went over to a buddy's house who is with a large broker in Hawaii, and he was playing on Arrive, and I was like, what is that? And he showed me, and this was 2021, so still in the infant stages. I think Arrive was still growing, and we were on Encompass, and it was painful.
Encompass.
Yeah. Well, and I come from Calyx. My first LOS was Calyx.
Me too. Yeah, I was a Calyx guy.
And I prefer Calyx because it didn't have all those it didn't have all those things screaming at you if you did something wrong. You needed to know what you were doing, but you could make Calyx do whatever you wanted, and it would let you. And Compass just stops working if you change something the wrong way. So yeah, so I jokingly say I'll never go back to retail because retail doesn't have arrived. But yeah, that got me really like that. It flipped the light switch for me. Like I was over it. So I started looking for my exit strategy. And one of the common themes in retail that I've seen from these few companies that I've been with is retail is so supportive, but they almost give you crutches, and it kind of like your muscles atrophy over time if you're not using them right. Well, retail feels like it does the same thing. They give you so much quote unquote support all around you that you become incapable of being independent. And so you almost get into this stuck feeling. And then on top of that, if you're a loyal person, you also have this loyalty to your branch managers or to the other employees. If you're a producer, you very well could be the reason that if you left, people might lose their jobs.
Right.
And that's a very emotional toll on someone. And this was conversations I had with some of the guys that recently joined my team from those past companies. And in fact, that happened when they joined my team. A lot of the retail shop pretty much was let go or shut down. And it's a very unfortunate thing, but if a company is only surviving on one or two people's origination and they're feeding that entire workforce, somewhere in there, something's not being run efficiently. And the thing I tell my guys is, as originators, our responsibility is to our family first, our clients second, and then our company third. But we shouldn't be doing what's in the best interest of the company in terms of profits over people, right? We should be doing what's in the best interest of our clients and ourselves, as long as it doesn't harm the company. But at least in my experience, these retail companies, they get very complacent and they just kind of spend without taking into account where it's coming from or what's going on in the back end. And then as soon as you have a down year, which after COVID, and even I think 2018 was one of those, like we had a spike up, but the only thing that saved a lot of those companies was a refi boom. And so, especially in the past couple of years, until this year, we haven't really had a refi boom. And I think we saw that impact a lot of retail companies that they didn't have the money to spend anymore. The recruiting went down. All the fancy trips got cut short. I have a couple awards up here, and it's kind of funny. You can tell the down years just by some years the awards were glass, and the next year the awards like some kind of flimsy plastic. So it always comes back to, retail. Every model has its pros and cons. Retail certainly has some pros, but to me, if you're a self-producing originator, if you're bringing in your own business, anything that retail might have as a positive for you, besides leads, anything else you can hire or you can get from the community in support. We'll talk about a few of them on some later points, I think, but there's some just powerhouse individuals, especially in the AIME community, that are so giving and share processes, technology, just all of the best practices that they've put together from their time in this industry. It's just, hey guys, here's the link, or what's your email? I'll send it to you. It's anything that retail might have for you that a company is saying this is a perk of being an employee of ours exists in the wholesale space at this point. And so as a self-producer, if you are an entrepreneur and you run your business more efficiently, and I would wager that almost any entrepreneur in our industry can run more efficiently than a large box retail shop, not only are you going to have more commission in your pocket for your family, but it's not going to be at the expense of your client. Your client's going to get a better rate and lower costs as well. And so
exactly. Yeah, I mean, Rylan, I don't mean to interrupt you, but you're
No.
hitting the nail on the head there. And that's a great way you put it, which was everything that retail says and how they justify how they get people the perks that they give, we're giving away as a community for free. And that was one of the biggest things that hit me, when I helped first start this whole association. It was, oh God, like, is everyone going to hold everything close to their vest? Is that it was like spewing at the mouth. I mean, I can go on and on about people and I always give them shout outs, but it's like, here's my document. Here's my processing, what do you call it? Your processing matrix, you know what I mean? And how you do everything.
We're thinking about the same one. Yeah, that was the first. Yeah.
You know what I mean? I'm like, are you kidding me? We had other people talk about how they implemented AI and it's not that expensive, but that's what they're selling.
Yeah.
So I have to ask you, once you kind of figured that out and you had Arrive and you had this stuff, is that what kind of made you make the jump to wholesale?
So the biggest step for me was a loyalty thing. In 2017, I mean, for me to step away those 6 months, I'll never forget. My right eye was twitching daily. Like I had a twitch. I was stressed. I was overweight. It wasn't a good time in my life. I was burning through relationships and it took all of that toxicity physically and mentally for me to go burn out and step away, right? Because I didn't want to leave the company. I had that false sense of loyalty and I'm still on good terms with a lot of those guys, but for no other reason than I didn't want them to not like me, or I didn't want them to be upset with me. I stayed way longer than I should have. And the same thing happened in 2022. Great people around. I didn't want to leave them at the time. My business partner and I were 50% of the entire branch's volume in the state. So walking out would impact people. People could potentially lose their jobs. Mm-hmm. And it physically took an opportunity for my wife and I to move from Hawaii to Colorado. And that physical separation for me to mentally feel good enough to approach my bosses and say, I'm done. I would like to resign. And it's a personal conversation. So, this was my experience. I'm not some altruistic great person or anything like that for staying. But what I do want to make the point of is it's not as bad as you think it is in your head. For me, it was that physical separation. But as soon as I told them, we actually had a really good breakaway. They obviously tried to get me to stay and offered a P&L branch and some other stuff. But for me, it came down to numbers. We did a pro forma side by side, what I was going to be making and offering my clients in margin and what they would be offering me. And I was either going to have to give up a significant amount of income to provide my clients the same rates that I would be able to in wholesale, or I would have to charge my clients more to make the same. And so it just became a very matter-of-fact conversation. Hey, wholesale's, it's just too good we can't compete, basically, was what leadership came down with. And so we had a really good step away, but that loyalty, that false sense of loyalty, I hope this isn't too soon, but my wife told me this last night, and it's so shocking. We hear the cliche that your company doesn't, if you got hit by a car tomorrow, your company would just keep going. For those of you that might have seen in the news, the CEO of United Healthcare was killed on his way to a meeting, 6:42 in the morning, walking to an 8 a.m. meeting about a company merger. He was killed on the way. They still held that meeting.
Did they really? I didn't know that.
Did. The CEO of the company heading to a meeting about a merger with another company. They still held that meeting.
Wow.
If there's not a better example of that cliche, and so my point to you, if you're an employee of a company watching this podcast and wondering if making the move to wholesale is the right move, take into consideration all the other things. Don't worry about your company. I'm sorry, they're going to be fine without you. These are multi-million-dollar companies. If you're the top producer in the top producing retail company in the country, they will still be okay without you. So don't let that be a factor to improving your position and improving your clients' positions. But
That's wow. That's kind of mind blowing, because I've been following it a little bit, because I'm not gonna lie, I'm a little bit of a conspiracy theorist type of guy. I love that stuff. It just keeps my juices going. But I did not hear that. But you're absolutely right. Yeah, I mean, those companies have to keep going. They're burning money, So, and they gotta have bigger profits every year,
yeah.
which is absolutely crazy. But so now you have your own shop. Is it true that you came to one of the fuses as a retail loan officer?
Yeah, so I officially left retail in June, July of 22, and that year I came to Fuse. I want to say you guys had Fuse early that year. I feel like it was before the summer, or
No, we've had
maybe
events.
I might
Where
have
was it
come to the
at?
2021 Fuse. It was Vegas.
So if it was Vegas, we've always had it after the summer.
Okay.
We did host some events in California before, like in February, Marchish.
Mhm.
But it was probably 21 Fuse.
Okay, yeah, it's probably 21 for you. So I came as a retail loan officer because I remember I was kind of like trying to avoid pictures and stuff. I didn't want it to get out. Again, Homebridge is a wholesale partner, so I think I went by the Homebridge booth. It was like those they keep the division separate, so I was kind of like spying on them. But yeah, so again, not to disparage anything else, but I knew of trade organizations. I had been in the industry 10 years, and um, they were always like, it just felt like someone trying to get some membership fees. They existed in Hawaii and they did events, but I had never heard of AIME or Fuse. And I had the opportunity to come visit, and it felt so much different. Again, I'm not disparaging anyone else. I'm speaking my experience of something felt different. It felt impactful. I don't like wasting my time. I don't like frills and thrills that are kind of empty. And being there and hearing the talks and seeing the community and just the welcoming nature, again, the collaboration of everybody, it was so starkly different from what I was used to, which was protect this house. Everyone else is the enemy. Don't be friends with any other loan officers. Like, the toxicity of the retail space from anyone on the outside, it was a different universe. And that was another huge piece of, like, in my mind, I'm making the right decision, was just the community. Everyone was super nice, super giving, super collaborative, and it just really broke up that like us versus them mentality of everyone was a different company. Every broker is independent, small shops, big shops, and just the ability, especially at Fuse. I mean, I was a nobody. I'm a small fish, honestly, amongst giants in this industry, and just having chats over coffee with CEOs of these 1,000+ LO mortgage brokerages that are just casually talking. I mean, it was so drastically different from my experience in that retail space. And so that was another, like, yeah, this is a no-brainer. Like, this is a community that I can be part of, and I can go do loans, however I want them. So I actually do cheat a little bit. A lot of people have asked me why I don't open my own broker shop. So I'm actually just a mortgage broker with and a mortgage group, but we have a DBA high five team. We have a really good setup. He takes care of all the licensing and admin type stuff, and I get to just focus on my team and origination. So I actually don't own the brokerage that my license is at. I just own the DBA. Yeah. But yeah, it's been a blast. And ironically, in retail, I was high five team, but we were just a marketing brand. And so I was able to, there's kind of a funny story of Homebridge trying to keep the branding and the logo when I left. And we had a little tug of war back and forth on the Instagram account at one point, but I was able to get it away, and we we incorporated and did everything legit after 2022.
Well, so and we're going to jump to Fuse here in a minute because you
Yeah.
were on stage, and I want to make sure we talk about that. But if you could give, because one of our goals this year is obviously to get these podcasts out to more and more retail people. I mean, we want our side of the industry to grow. We feel it's best for consumers, best for everyone. What piece of advice would you give if you're a retail loan officer listening to this show right now?
So my biggest piece of advice is, again, both channels have their pros and cons. I believe that retail's biggest pro is its ability to train. It's just the volume and the mass of touches you will get on files, right? As a brand new retail loan officer, people are probably going to be shoving loans in your face, going, "Help me with this, look at this," etc. That is great for the reps. But again, wholesale is duplicating and doing it better, everything that retail has available. So there are wholesale companies right now that will train a retail loan officer. So if you're new, I could see there being a 50-50. If you're experienced and self-producing, I truly believe that wholesale is the best model, not just for you, but for your clients as well. And it's everything we've talked about. You have the option of, instead of it being my rate, it's the bank's rate. And if the bank's rate isn't making the client happy, we can look at another bank's rate, right? You get to separate that piece in your communication with the client, which is huge. If you're a retail loan officer right now and you've ever woken up sweating about what the market is doing, that goes away in wholesale. The market just is what it is. It's no longer tied to you and what you can offer. It's the market.
Right.
That one stress alone, if you're a retail loan officer and you have ever woken up dreading a rate conversation with a client, that doesn't exist in wholesale. Honestly, that alone is enough for me.
Right.
But then the collaboration and communication. So retail used to have economies of scale. You have 1,000 LOs, you have all this volume, so they are able to get certain things, certain technologies, XYZ. All of that exists in wholesale now. So that's not a reason. And there are everything from small you can run your own, you can open your own brokerage. There's a myth that you need to have, 10 years in the industry before you open your own shop. Some of the fastest rising stars in the AIME community right now have been in the business 2 years. There's a couple guys that, if you're in the Brokers Are Best Facebook group, I mean, they're crushing it right now. They've been in this industry 2 years. So you don't need a ton of time. The community is here to support. The technology is here. We just had some awesome technology bombs drop in the past 30, 60 days, some really cool stuff out there. And it's not going to stop. The retail model honestly feels like the dinosaur model right now.
Yeah.
I think Katie Sweeney posted, or Katie and Jonathan, I think, were at a panel in the past month, and some very large banks were saying how AI is going to take over this industry in the next 5 years. I think it was 5 to 10. I think that's going to affect retail first. The quantity over quality mindset is going to be the first to be replaced. And right now, that's the cubicle kind of right out of college. That my previous retail branch was kind of notorious for it. It's just, hey, let's get as many people making as many phone calls as possible, and they're not learning to be originators. This wholesale space is going to teach you how to be an entrepreneur, how to be an originator, and how to build your own business, everywhere from the independent space to the large brokerages that offer a lot of that support, but they're still giving the commissions back to the LO, letting them run their business, and letting them shop and provide as many options as possible for their customers, their consumers. That I just don't see. I know that wholesale is still underneath that 50% mark on market share right now, but we are growing so fast. Instead of doing what I did, which was spend 10 years of my career in the dying model, what I see as the dying model, just come over to wholesale now, rip the Band-Aid off. It's all the myths and fear mongering that you've probably heard. I used to be that manager, cell service, not rate. You don't have control. It's slower, XYZ. None of it's true.
I love it.
I wish I had gone wholesale 5 years. In 2017, that should have been my jump.
Yeah, you know what it is what it is now, but I think you feel that pain a little bit more, so it's more genuine now. When you say, not that it wasn't genuine, but it's just more genuine now. So no, I think it's great. And you talked about this at Fuse this year, if I'm not mistaken, right? So you were on a panel at Fuse. Tell me about your panel.
So the panel was retail to wholesale, like the stories of originators that had gotten their start in retail and come to wholesale. And yeah, great panel, some awesome people with all different backgrounds. And we all came to the same conclusion that the best move for us was the wholesale channel and giving not just our clients, but ourselves those options. Like I said, if you're in retail right now, especially, the biggest fear is the fear of the unknown, or what your managers are going to tell you is like, oh yeah, grass always looks greener on the other side. For me, it's just simply, it comes down to numbers. There's a million reasons to join, but at least if you're an analytical person, I can speak to you on that point. It's very simply, the wholesale channel is going to give you the power to run your business as efficiently and effectively as possible. And especially if that's what you enjoy doing, if you enjoy that entrepreneurial mindset, this is going to be, it's going to be life-changing for you. Yeah.
Go ahead.
I was just going to say, just the ability and availability to do and run your business however you want, compliantly, of course. Like, we still have rules to follow. But when I first joined wholesale, my broker was on Encompass. And I was like, hey, I'm not using Encompass. I'm going to go use Arrive. I'll do my own mortgage call reports and submit them to you. Is that okay? And he said, yes. If I went to my retail office, they once tried to take Adobe from me, right? Like, I just can't stress enough. Like, some of the simplest things, it felt like I was fighting my own company to do business in retail. And in wholesale, everything is just about, how do we support you? How do we make you better? How do we make your job easier and let you have more fun? Because if you're not having fun in what you do, right, why are you doing it? Like, and yeah, that burnout that I was facing, I'm having fun again. I enjoy it again. So if you're retail and you're feeling burnt out, or you even have that itch of wondering if you should, the answer is yes, you should. The water's fine. Jump in.
I bet you never thought in a million years, because I can tell you're a very humble person, that you went to Fuse 1 year as a retail loan officer, and then a few years later, you're on stage.
Yeah, I'm an introvert at heart, so yeah, never really saw that or honestly wanted that. But I was talking with Kurt before we jumped on this morning. I was a production manager for a small time, and I enjoy helping people. Like, I enjoy, if you bring me a problem, I like solving it, right? And so just being able to share my experience, I hate being in the spotlight, but I do, the pain of that is far superseded by the pain of someone sitting in a spot they're not happy with, stressing about conversations with their clients that are supposed to be happy, fun conversations. If I can convince even one person to give the other side a shot, then it's all worth it.
That's awesome. Now, I don't know if you know, Rylan, I bet you do. We've been making huge announcements here, when this is posted and whatnot, but it's pretty recent here that we have announced our 2025 Fuse site, which is going to be Nashville, Tennessee, which is one of my most favorite places. I went there. I've been there 3 times now for kids' baseball tournaments, and once games are done, we go and have a little fun. But it's October 23rd through the 25th. Do you plan on going?
Oh, absolutely. And I've never been. Super stoked and excited for it. Yeah, my wife has been. So my wife processes for me. And so she's really stoked about it. You guys made the announcement, and I heard her yell from the other room. So yeah, we will be there for sure.
That's awesome. Well, Rylan, you're busy. I get it. You know what I mean? We're all trying to stay busy. I got one more question for you, then I'm going to let you go here. At the time of this recording, we got about a month left of the year. I know people are really pushing to, finish out their year strong, but also planning for next year. What is your mindset from this point and going through 2025?
So mindset right now is things I can get better at. And as long as I've been doing this, I can always get better at working my database and following up with my past clients. These people already know, like, and trust you. And we get very busy with new business. And I think, at least for me, I forget about business I've already worked really hard for. So my mindset going into the new year is just to be more mindful of the people that already know, like, and trust me. And I'll give Tyler a shout out. He made a post this morning. He puts it in his calendar every Thursdays. He calls all his past clients from the month before, and it's intentional. So my mindset going into 2025 is to be more intentional.
I love it. I absolutely love it. Rylan, listen, dude, you absolutely crushed this one. You made my job really easy. I'm going to tell you that much right now. If you could see us right now, I'm just kind of sitting back and I'm just listening and just taking it all in. So, Rylan, you did an absolutely phenomenal job. I really appreciate it, and thanks for your time today.
Thank you, Mark. Y'all have a great day.
All right. You too. Brokers, if you want to get caught up on all of our past podcast episodes, please head over to aimgroup.com/broker-to-broker. You can also listen to all of the Broker to Broker podcasts on iTunes, Spotify, Google, pretty much anywhere you can download podcasts. Do us a favor, rate it, leave a review, download it, subscribe to it, whatever that platform allows you to do. It helps us get the podcast out there and spread the word. And we love spreading the word about great people like you in our industry. So once again, Rylan, thank you. And everyone, we'll see you on the next episode.